Good morning, Neeraj. Now, if you see the share price chart of Reliance Industries for 2018, you can see how clearly for the first 5 months of 2018, the share has given literally no returns to the shareholders. But now in the month of June, it has surged nearly 12%. In the last 1 year, if you see the analyst rating for the stock, from 23 buy ratings last year, it has now moved up to 29 buy ratings. And the target price from 730, it has now moved to close to 1085. So let's see what are the possible reasons that could be aiding Reliance Industries this surge in stock price and why analysts are getting more bullish on the stock. So first is the lower cost of production for Reliance Industries. Now Reliance Industries uses ethane imports and gas from its petcoke plants for the internal use, that is for its refining and the petchem business. It uses the ethane imports and the gas from the petcoke plants as feedstock. Now the price of these feedstocks are much less than that of the liquefied natural gas, that is LNG. Now why it is cheaper? Because the LNG prices are linked with oil prices. So what is happening here is that though oil prices are higher, the cost of production for Reliance Industries is much less because of these feedstocks, which will in turn boost the company's EBITDA and also the gross refining margins. And if you see, because of this, the second benefit that the company is getting is, now it's a refinery off-gas cracker plant. Now that was fully ramped up only towards the end of financial year 2018. But now as that plant is fully ramped up and fully operational, the company will derive more cost benefits because of this. And because of both the cost benefits, analysts are expecting the EBITDA of the company to jump nearly 34% in financial year 2019. And this jump of 34% will be the highest that the company will see in at least the last 9 years. So a 34% jump that is expected in FY19, that is because of the feedstock benefits and because of this ROGC plant. Now, if you see the third benefit, not a benefit, but what could be driving this stock is that in FY19, financial year 2019, the company is expected to generate free cash flow for the very first time in the last 6 years. Now, if you see from that is financial year 2014 to FY18, the company was continuously generating negative free cash flow, and that was because of the heavy capital expenditure plans of the company. But now, as the capex has come to an end, the company is expected to report a free cash flow of close to 6,000 crore rupees in financial year 2019, which in turn could lead to higher dividend yields for the shareholders.
So Somit, that's the core business of oil and gas. What about the other businesses? What about the newer businesses?
So if you see on the consumer businesses side, for Jio, Bloomberg has already reported that there could be a potential, that Reliance Industries is looking for a potential IPO for the Jio business. But when it comes to the retail business, well, that could also see a potential listing. Now, why it could list? Now, if you see in the financial year 2018, the retail business of Reliance Industries has reported its highest ever revenue, its highest ever EBIT and highest ever EBIT margins. And if you see the growth in the last 8 years, the revenue of retail business has grown 10 times, from 6,000 crore in FY11 to 69,200 crore in FY18. And from a not so profitable business, it has now become a profitable business. Its EBIT margin FY18 was highest ever, close to 3%. Now, in the annual report, in FY18 annual report, Reliance Industries said that these consumer businesses of Reliance Industries has attained a threshold from where they will start contributing meaningfully in the consolidated net profits of the company. And in an earlier meeting, shareholder meeting, Mukesh Ambani had said that they would look to unlock value in these businesses only when they attain a certain threshold. Now, we exactly don't know what is that threshold, but a self-sustaining business could exactly be one of it. And lastly, it's Jio. Now, if you see the customer growth, in fact, the recent counter offers that the company made, now that has again made the street confident about the company's desire to increase its customer base. And if you see in the last 20 months, the company has added nearly 18.7 crore subscribers, and now it has only 2 crore less subscribers than Idea Cellular. So you see how strongly the company has been adding subscriber base. And it's not only the subscriber base that the company has been adding. In the last 2 quarters, the business of Reliance Jio has also become profitable. So it's both the things that are benefiting, and the prospects that the Reliance Jio has going forward is pulling Reliance Industries stock higher.
Yeah, well, that's interesting. Others have plateaued out, so to say, save for maybe Bharti a little bit. But yeah, Reliance Jio has only added. So Somit, all of this is great. Core business is looking good, consumer businesses are looking good. So positives are in place. What are the risks that could maybe hamper Reliance Industries?
So there are a few analysts which still believe that the company would still take time to generate free cash flow, and that is because the company has been heavily investing in its telecom business, which it could continue to do going forward, and that is because these analysts are believing that the free cash flow would still take time. And because of this delay in free cash flow, the deleveraging of Reliance Industries' balance sheet would also take time, which would keep the interest burden higher or at an elevated level for Reliance Industries in the coming quarters and the coming years. Along with that, if you see the Jio business, now that has been adding customer strongly, but the average revenue per user, now that might not meet the expectations or would still remain under pressure because of the pricing pressure that we are seeing in the industry. And lastly, if there's any sharp movement in the crude prices, that could negatively impact Reliance Industries.